Hi everyone, Natamias here, back with another video. And in this one, I'm going to talk about something different in the realm of capital raising, how to go from somebody who has a scarcity mindset to somebody who has an abundance mindset. And this can make all the difference in your particular capital raising campaign as you're working on raising between $1 to $100 million equity or debt. And it can also have a dramatic effect on different parts of your life. But there are several patterns and things that different people, placement agents, people who play the game of raising capital and everything, see when they work on operating from a place of scarcity versus a place of abundance. And these things actually have a dramatic difference. So let's just walk through and talk a bit about how it looks like what's the difference between the scarcity mindset when raising capital and the abundance mindset. And I'm actually going to go through 1, 2, 3, 4, 5, 6, 7, 8. So I'm going to go through 8 different pieces here and walk through 8 things to look out for as you're working on raising capital with an abundance mindset and how to avoid this scarcity mindset. And so the first thing to look out for is competition, because when one looks at competition, so when you raise capital, you're working on operating your business to raise capital, there are several pieces when it comes to competition to be in mind of. Because some people, they acknowledge that competition exists in the marketplace, but one must see between the lines and be innovative as they're working on differentiating themselves from competitors. Because when people work on differentiating themselves from competitors, one has to think outside the box. The paradox with focusing on competition too much without focusing on new innovative ways of solving problems for customers is that you compare yourself with competitors on a limited amount of dimensions, right? Because there's almost a limitless ways of differentiating yourself from competitors in many cases. But when you focus and you get into the world of competition, then almost by mistake, you almost forget to think of the things that can differentiate you from the competition. And it's a paradox, because the more you focus on the competition without thinking about your own strategies to solve the problems in the market, the less you actually think about differentiating, and the more you think about how your competitor operates, which makes you think like your competitor, which makes you operate on the same dimensions of the competitor. So one example is looking at people who operate in a particular industry. For example, I'm not somebody who came from the financial industry. I'm an outsider to the financial industry. So the reason why I'm actually starting an investment bank based in Canada, which is taking on clients globally by setting up the registration process of the Ontario Securities Commission and by working with different investment bankers and broker dealers around the world. The reason why this is happening is because I'm coming at it from an outsider entrepreneur, somebody who was a technology programmer and didn't see all of these inefficiencies from up close. Many people in the industry, and most people in any industry, cannot innovate because they're bombarded by seeing the same things over and over again, and it makes it impossible for them to innovate because they're used to seeing the same things. Like many people who send out inefficient emails and inefficient, non-systematized marketing systems, and who use the same antiquated ways of hiding information from each other. Many people are doing that because they're working with many people who are doing that, and it's really hard to think outside of a consciousness that you created or that you're in. So many people who are outsiders to an industry or outsiders to a mode of operation can see the inefficiencies of a traditional world, and they differentiate. This is what Uber has done to the taxi industry. This is what Airbnb did to the hotel industry, and this is what outsiders do. And basically, don't think like your competitors if you want to differentiate from them. Be aware of them, but don't think like a competitor. So the next one the next thing is that it makes you think very short term. So competition and scarcity mindset makes you think very short term, because when you're competing with each other and when you're working from a mode of self-interest, you actually lose out in the long run, because in game theory there's something called the prisoner's dilemma. And the prisoner's dilemma basically says that it's basically an example of people who act out of self-interest alone don't win the majority of the prize. People who act out of mutual self-interest usually win and win bigger prizes in terms of any competition. So what happens is, if you're operating out of mode of scarcity, you think that resources are scarce, you'll be tempted to work out of a mode from your own self-interest and forget about everybody else, because you think that resources are scarce in a particular environment. But if resources are scarce and you want to do everything alone without thinking about the self-interest of others, following that temptation usually isn't the best path for the long run. It's usually best if you're raising capital to work on raising capital by creating win-win games for every single player, rather than just focusing on how much you need to raise equity for you to fund your idea. You have to think about what other people want and the risk that investors are putting into their lives by working on your deal. Think about the collateral that they need to have if you're working on debt. Think about the returns that other people would have. Think about the compliance burden that a lot of broker-dealers have. Think about all of the stress that lawyers have that associate with you and put their trust in your word and what you're doing. And just think about the big picture. Because if you think about things too short-term and just focus on yourself, then you're not really doing anyone any favors. So next is manipulation. And this is something that is really important, because generally in industries like private banking, investment banking, law, and entrepreneurship in general, you see a lot of people that play a lot of Machiavellian games. And this is something that people don't talk about, but it exists and it's rampant in this industry. And one way to steer clear of all of these games of manipulation, of people, creating all these, playing politics and all these things, and just being merit-based, one way to steer away from that is actually trying to realizing how bountiful resources are in capital markets. Because when people don't realize that there are literally hundreds of millions of dollars of deals flowing through capital markets left, right, and center, then you won't have to be so bound to different people and depend on very few scarce things to work out. And so keeping an abundant mind and reminding yourself that in capital markets there's a lot of opportunity can make you win. And it can also make you not have to depend on that one investor that needs to close, or else the deal would not happen. Or thinking that different seed companies that offer capital, like for example Y Combinator, is the source of all praise and is almost like a divine person in the world of seed investing. But when you don't realize that capital markets is huge, and it's not just these small companies, you can actually understand that there's an actual process here to raising capital, and it's not just something that is very scarce, and $1 million isn't something that is really scarce and hard to come by in capital markets. Because capital markets is crazy, and there are trillions of dollars flowing through capital markets once you build the systems, the architecture, the people around you, the teams, the assets, the structure, and you just have the patience to build all of these things. Then you won't have a scarcity mindset when it comes to any investor or raising a few $1,000. Next is thinking small versus big. Because if you think too small when you're raising capital, what can happen is sometimes you actually shoot yourself in the foot. And the reason why you may shoot yourself in the foot is because I remember this story. One of my associates, actually, is funny. I borrowed a car once. And this can apply when you're raising capital too, but bear with me. I actually borrowed a car once to go for a drive somewhere. And the person was saying, hey, make sure that I go to a gas station that is cheaper than another gas station. But because there's this idea that the gas station had a really good brand around it, and people thought that the gas there was so much cheaper, but people actually never did a calculation. And given that I actually checked the difference in the gas, and it didn't even come up to $1 or $2 in filling a 30-liter gas tank, or I think a 70-liter gas tank. And these are silly, trivial things that take your energy off of big capital raising opportunities, because the amount of energy that I would need to think about things that trivial can take my energy away from consulting people and working on their raises. Because one brain cycle taken away on trivial matters can ruin everything. And so that's why when you approach these investors, don't be so caught up with all these trivial matters. because it can make you think small, and by thinking small, it takes your energy, your mental energy away from the big picture. And the big picture is what's going to get you funded. And yeah, so that's pretty much it. So in short, competition, focusing too much on competition breeds conformity, which can stifle innovation. Being really short term can be bad in the long run, remembering the prisoner's dilemma, and that making win-win games for everybody will make you win in the long term. And not relying on manipulation and scarcity to focus on these small awards when you realize that capital markets is huge and is crazy, and there are a lot of opportunities in capital markets. And so with this, thank you for watching this video. And if you're looking to raise capital, just head right here. I think Arapoliscapital.com is written right here. I'm not sure, maybe it's not. But in any event, thank you for watching this video, and I'll see you in the next one.